Hi and welcome back to Cheeky Crypto. Today guys, we're going to be jumping down into the world of Bitcoin, taking a look at the most recent price action and what I think is likely to happen next. As I get into this video, if you find it useful and informative, smash that like button, really do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and it is the first place that we go to notify you of everything that is going on in the crypto space. So why not check it out, linked in the description down below. Let's make a start with this thing, right? Okay, so we're going to be taking a look at two kind of charts. Two charts. We have the smart money concepts just here, and we have the Elliott wave theory on this side as well. Let me just clear out some of that noise. So we're going to start things off with the Elliott wave theory, following on from yesterday's video. My expectation was that we were going to move down. It looks like our wave 4 hadn't finished, so that was on me. So let's take a look at this, right? So we actually pushed up just a fraction further here. And again, like I said yesterday, if we were to short this and we wanted to kind of be thinking about moving down into this fifth wave movement, then we're going to put our short position on wherever our entry was. We probably were recording the video around here. So let's put it right there. Our stop loss would have been just above this wave 1 because that's the technical invalidation. And we would have put our target range down here somewhere. Our risk reward ratio wouldn't have really have been effective. It's not something that I would have done myself because it's lower than 1.5. Okay, I could try to make it fit, but it'll be really pushing the boundaries of where I think that could potentially go. So it's a high risk kind of trade. But if we were to do it, we'd have had our stop loss up here. You can see that we would have come down in profit. We still would have been right now technically in the red area. I still think we've got to come down though, even if we have completed this fourth wave. So I'd still, if this was a better risk reward ratio, I probably would just be holding this until we get down into the profit range and then look to come out of that. Obviously stop loss wouldn't have been hit anyway. But as I said, you know, we've got to make sure that we have good risk management with everything that we do. So our wave 4 is not here, it is here. Okay, and we have a 3-wave structure. 1, 2, and 3 like that, and A, B, and C, just like so. So we've completed our 4th wave up here, which means our 5th wave expectation does change a little bit. So let's go ahead and jump into that. I'm just going to move that out of the way as well. In fact, I'll also remove this one for a second. And let's clear out some of this noise. Right, okay, let's just focus on this 5-wave structure. So if this is our wave 4, then our final 5th wave movement would be right in here, between 26,524 and 26,817. Okay, so that would be the range that we'll be trying to target out to come down towards. Okay, so we kind of see that right in there. Now, as I had drawn out with the other sub count, or the other big account there, which is 1, 2, all of this being wave 3, then 4, then 5. Okay, so we see that one going on in there. In order for this to kind of play out, we do need to drop down lower. So we need this to come up to here. We can see the 1.618 is right here, so I'll go ahead and throw this back onto that level right there at 26,908 approximately. My line's actually at 905. That's fine. We'll hit that number. We'll know that we hit the 1.618. So we can see that this structure coming down into this final 5th wave movement would then cross past the 1.618, which will be our wave 3 of a bigger structure, which will then move up into a wave 4 and then down into another wave 5. That there would then also constitute another structure, which will be from this point. Okay, pull that across, snap that to the top, push this to that swing high there, and you can see that there's another 1.618 right down here on this yellow line at 25,190. Okay, and now that would actually allow us to then look at this thing as a big wave 1, wave 2, wave 3 coming all the way down there, then 4 and 5, right? So we'd have to see something like this that would have to occur. Okay, now why I talk about these things and why are they important? Well, it doesn't look like we'd actually be able to push down into this level, which means that we'd probably only end up with this being a zigzag pattern rather than an impulsive 5-wave structure, right? And this is important because a 5-wave structure like this would be an impulsive trend setter that would basically be trending to the downside, whereas a zigzag pattern finishing here is basically just corrective and short term, and we would expect reversal from there. Okay, now all in all, if we take a look at what's going on right at this upper end, it looks very much like a Wyckoff distribution event has been going on up here, but I haven't got the time to plot that today, so maybe that's something I'll look at over the next couple of days. Now, the other thing that's kind of also apparent here is there are some patterns that appear outside of Elliott wave theory that is also pretty consistent with this kind of structure that we see happening here as well. And the obvious might be that it's some kind of inverted cup and handle. That's also an interesting kind of concept to be thinking about. But for the most part, there's a pattern that follows or is created by market makers. And it kind of goes up, kind of goes sideways, up, sideways, until it reaches like the top here. Then it does this same kind of pattern on the way down, all the way back to origin. So basically, there's FOMO that gets created on this way up, and then fear gets created on the way down. It's a market maker pattern. I don't really know what they call it. There must be a technical name for it, but I don't really follow it. But you kind of get the idea that we are doing something not too dissimilar. We push up, we correct down, we push up, then we have this kind of long sideways trade, and then we kind of have those bigger movements to the downside. It's going to be interesting to kind of see how that plays out. Now, I don't think we're going to have this bigger move, so I will remove that for now, but we do know that 25,190 would be an interesting level to be hitting. Ultimately, it looks like this pattern here could play out. We have our invalidation levels set right up here on the wave 1, right there, so 27,934, and we should not cross that one. And I think, yeah, we could probably short the market in here. Now, it does look like we might be getting an overextended fifth wave, which might take us down a little bit deeper. And the reason for that is we can kind of see this move coming here. We pull this to here. We can see that the wave 3 is going to be all the way down at 26,600. So we might actually have to peak down a little bit lower than this and have an overextension within our fifth wave movement. But it'll be interesting to kind of see how it does play out, because it could also be a diagonal based on the starting position here. So it might actually be... yeah, it could be, actually at this point, it could be a couple of different diagonal structures that are appearing here. So it's a bit too soon to really know. But down should be the way that would go. Like I said earlier, I wouldn't necessarily short this one. I don't think the risk-reward ratio is really there. Like if I look at the entry being like on market value right now, the risk-reward ratio actually is about 2.0, possibly could. We probably could short it, just marginally get away with that. It is above 1.5. I'm okay with 1.5. 2 is okay. And so maybe shorting it at market value at this point, so 27,515. Stop loss above the wave 1 at 27,934. Maybe I will short it. Let me know what you would do in the comments down below. Now, if you are a trader and you haven't yet signed up to BitGet, check it out, linked in the description down below. It's where I do all my trading, whether that is spot trading all the way through to leverage-based trading as well. They do some fantastic offers, such as the cashback offer that we're running at the moment. Deposit $50 USDT, get $10 USDT back as well. And they do rewards all the way up to $8,000, depending on the amount you deposit on the platform and the trading volume that you put through with them. You can get some fantastic deals that way. Above and beyond that, though, we are running some competitions down in our Discord server. These are competitions that we are running ourselves. We are using BitGet as the partner to basically gather all the data from you guys and your trading activity, and the person who basically earns the best ROI in a 1 week period will win $100 USDT. We look to scale that. We were aiming to try to push this up to $1,000 a week and then $10,000 a week, depending on how many people can come in, because we do want it to be self-funded. So yeah, this particular weekly competition ends in 6 hours, and another one will open up tomorrow. So another fantastic reason to maybe sign up with BitGet if you're a trader, and if you get the best ROI in a 7-day period, well, then you will win the competition. More details are down in our Discord server. Link to BitGet is down in the description below. The competition is only open to people who have signed up through our link in the description down below, and that allows us to do all the tracking of your trading activity. So let's jump back down into the charts, but this time take a look at smart money concepts, right? So we have an idea that we could probably go short and finish off a fifth wave movement, but what does smart money concepts tell us? Does it confirm that we should be shorting the market, or does it think that we should go long? Let's take a look, right? So here we can see some interesting things. I'm going to do what I really don't like doing, and that is draw some trend lines. These things are just, yeah, they're not my kind of cup of tea, but nonetheless, we can see here we are in some kind of triangular wedge, right? And it all depends on where you want to draw these things, because I could draw them up here and I could expand that over to there, for example, and we could look at that as maybe a move to the upside, right? We're just stuck inside this little wedge pattern. Essentially, I don't think that's overly too important. One of the things that we do know, though, is that we are sandwiched in between two order blocks here, according to smart money concepts. We have this internal order block down here for buyers, and we have these ones up here for buying. But more importantly, for selling. More importantly, we have this selling order block right here, and this is what tells me shorting the market might be the idea. Not only are we facing resistance on the 50 EMA, we're also finding resistance on equilibrium, and we also happen to be inside an internal sell order block. So it looks like a short position from about here would be pretty sizable. Again, looking at our positioning, we would put that above the swing high from a smart money concepts point of view, but I think I would personally put it a little bit higher to protect ourselves against any major issues. So basically, you know, if we take a look at this one, I had it up here above the 27,900, whereas smart money concepts would probably say 27,700 or 700, 800 would probably do the job. Then, of course, you could see we're probably going to have to move back down, and even if we'd come down and test some of these low areas like these swing lows, or maybe even the discounted area, we don't really have a good bead on exactly where that's going to go, but the risk reward ratio could be pretty good if we were to come down into that kind of $26,500 range, for example. Now, the other concern that we do have with shorting here is that doesn't give me a good area to find target wise without using Elliott Wave theory. So Elliott Wave theory has the target to the zone to the downside, but smart money concepts doesn't. We do have a strong low, so I'd be a little bit hesitant on the short from that kind of point of view, and we have a weak high. Although there's a lot of selling coming on here, there isn't a lot of buying. So is it possible that we actually do move down, lose that low, and actually come down into that $26,500 range where the next set of buyers are? Possibly. So it does look like the resistances are strong, but no real clear target. So I'd have to say Elliott Wave theory is probably the closest thing we're going to get to a good range target. We're currently finding support on the 200 EMA, that's the yellow line here, and our expectations will be that we'll have to lose that support in order to continue this move to the downside. The other thing that we can see on the smaller time frames here is we had a minor change of character here and a minor break of structure here. This is confirming that we should probably be starting to think that there's a short-term move to the downside occurring. Although our macro hasn't changed, we've got some bullish tails here. We haven't actually changed that structure from bullish to bearish on a kind of larger time frame. There's only really these minor movements. So I think a short position here isn't too bad. I probably would look to short that market. In fact, I probably will short Bitcoin at this point. Let me know what you would do down in the comments below. After we kind of complete this structure, I would expect a bigger move to the upside. As I'm not expecting us to go impulsive to the downside, I would just look at this as a zigzag ABC corrective structure, and then we can start rallying from there. Let me know what you would do in the comments below. I'm going to leave the video there. If you found it useful and informative, smash the like button. If you're new, subscribe. Don't forget to join us down in Discord. And guys, I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.